Picture this. Two investors each put $10,000 into cryptocurrency in 2023. By the end of the year, one made $50,000 in profits and kept every single penny legally. The other also made $50,000, but lost $30,000 of it to penalties, legal fees, and back taxes because they ignored the rules. Same market, same timing, completely different outcomes. The difference? One understood that in crypto, being smart isn't just about picking winners, it's about playing the game by the rules. I'm Santiago Cueto, board-certified international business law expert and best-selling author. I've helped thousands of investors navigate the complex world of cryptocurrency regulations while maximizing their returns. I've seen brilliant traders lose fortunes to simple compliance mistakes, and I've watched cautious investors build generational wealth by understanding both the opportunities and the legal landscape. Today, I want to share the strategies that separate the winners from the casualties in this wild west of digital finance. Let's dive in. Let's start with reality. Cryptocurrency exists in a regulatory gray area that's getting clearer by the day and not always in a way investors like. The SEC, the IRS, and other agencies are writing the rules as we speak, and ignorance isn't just costly anymore, it can be devastating. Here's what every crypto investor must understand. Every single transaction is potentially taxable. When you trade Bitcoin for Ethereum, that's a taxable event. When you stake tokens for rewards, that's income. When you provide liquidity to a DeFi protocol, you're creating multiple tax obligations. The blockchain never forgets, and neither does the government. But here's the good news. Compliance doesn't have to kill your profits. It just requires strategy. First, decide if you're an investor or a trader in the eyes of the law, because this determines everything about your tax treatment. If you're buying and holding for long-term appreciation, you want to be classified as an investor. This means capital gains treatment much more favorable than ordinary income taxes. The key is consistency. If you claim to be a long-term investor, don't day trade from the same account. Keep your investment activity and any trading activity completely separate. Different wallets, different exchanges, different record-keeping systems. For serious investors, consider forming an LLC specifically for your crypto activities. This provides liability protection and can offer tax advantages, especially if you're engaging in more complex strategies like mining or DeFi yield farming. Now, the next strategy, this is where most people lose money unnecessarily. Every trade is a taxable event, but smart investors use this to their advantage through tax loss harvesting. When you have winners, you can strategically realize losses to offset the gains. Unlike stocks, crypto doesn't have wash sale rules yet, though this might change. This means you can sell a cryptocurrency at a loss and immediately buy it back, maintaining your position while harvesting the tax loss. It's perfectly legal today, but do it with the understanding that rules can change. Also, timing matters enormously. Hold assets for over a year whenever possible to qualify for long-term capital gains rates. The difference between short-term and long-term treatment can be 20 percentage points or more in taxes. Next, here's something most people don't know. You can hold cryptocurrency in retirement accounts. Self-directed IRAs, solo 401ks can legally hold crypto assets, giving you tax-deferred or tax-free growth depending on the account type. The setup requires working with specialized custodians, and there are rules about what you can and can't do. But for long-term wealth building, this is incredibly powerful. Imagine holding Bitcoin in a Roth IRA. All future appreciation is completely tax-free. You should also navigate DeFi intelligently. Decentralized finance offers incredible opportunities, but it's also a compliance nightmare if you don't approach it correctly. The key is documentation. Use tools like Coinly, CoinTracker, or similar services to track every transaction across protocols. When tax time comes, you'll need records of not just what you received, but the fair market value at the time you received it. For DeFi activities, consider geographic arbitrage legally. Some jurisdictions have more favorable treatment of DeFi activities. If you're already considering relocating for other reasons, tax treatment might be a factor to consider. You'll also want to stay ahead of regulatory changes. The regulatory landscape changes fast in crypto. What's legal today may not be tomorrow, and what's unclear today might become very clear in either direction. Build relationships with professionals who specialize in crypto tax and regulatory issues. The cost of good advice is always less than the cost of mistakes. Subscribe to regulatory updates from law firms that specialize in digital assets. Follow the right people on Twitter who track regulatory developments. Most importantly, maintain detailed records of everything, every transaction, every wallet address, every exchange account. The government's position might change, but your records need to tell a consistent story from day one. There's also international considerations. If you're a person, you're taxed on worldwide income, including crypto gains, no matter where they occur. Moving to Puerto Rico won't help with existing gains, but it might help with future gains if you establish a bona fide residence there. For non-US investors, understand that using US-based exchanges might create US tax obligations. Similarly, certain types of crypto activities might be treated differently depending on your jurisdiction. Risk management and compliance is another area to consider. Never put more crypto in than you can afford to lose, not just from market volatility, but from regulatory changes. Always maintain records that would satisfy an audit. Always report what you're legally required to audit, even if you think the government can't trace it. Remember, blockchain technology makes everything more traceable than traditional finances, not less. The government has sophisticated blockchain analysis tools, and they're getting better every year. For those with significant holdings, consider sophisticated structures, opportunity zone investments, charitable remainder trusts, and other advanced planning techniques can be incredibly powerful when combined with crypto investments. Estate planning becomes crucial with crypto because of the technical knowledge required to access holdings. Make sure your estate plan accounts for digital assets, including secure methods for heirs to access wallets and exchanges. Now here's something nobody talks about. Following the rules actually makes you a better investor. When you know you'll pay taxes on short trades, you'll naturally hold longer. When you understand the compliance cost of complex strategies, you focus on simpler, more profitable approaches. Compliance forces discipline, and discipline builds wealth. Start today by organizing your existing records. Download transaction histories from every exchange you've used. Set up proper tracking software. If you've been non-compliant, consider voluntary disclosure programs. The penalties for coming forward voluntarily are much less severe than being discovered. Going forward, make compliance part of the investment process. Before you enter any position, understand the tax implications. Before you use any new protocol or exchange, understand what records you'll need to keep. The rules will continue to evolve, but they're evolving towards more clarity and more enforcement, not less. The investor who builds compliant practices now will have huge advantages as the space matures. We're moving towards a world where crypto is just another asset class with clear rules and professional infrastructure. The investors who position themselves properly for this transition will be the ones who build lasting wealth. Before I go, if this content helped you understand how to navigate crypto investing legally and profitably, please hit that like button and subscribe to my channel. I release new videos every week covering the latest developments of crypto law, tax strategies, and investment techniques. Your subscription helps me continue providing this analysis that you simply won't find anywhere. And remember, this isn't legal advice for your specific situation. Always consult with a qualified professional who understands both your circumstances and the latest regulatory developments. Thanks for watching, and I'll see you in the next one.